Good morning. In this presentation we are going to see how we can trade in MCX natural gas today and for this week. Before looking into that, let us see what happened last week and what we expected last week. The chart which you are viewing is an 1 hour chart. That means all the single candlestick here represents 1 hour. Whenever I place the cursor on a particular candlestick, we can see the date below, and these vertical dotted lines indicates the price opening and closing for the respective days. You can see this tiny candlestick that indicates the natural gas price opening, and what we expected was that we were targeting this 206 zone, and we had identified this 206 zone as a possible trend reversal zone. So if the price was staying above 206, the market will most likely to go with a trend. That means that if you see the price actions on the previous weeks and if you see the trend of natural gas, it was staying in line with the trend. That is, it was maintaining an uptrend. So the scenario says that the market took some resistance around 206 here on the previous week, and it is also taking some support around 202. So that is the reason we had explained clearly why we had taken this 206 as a trend deciding zone. So what happened on Monday was that initially it was coming down, then after taking some support around 202, the price broke this 206 and it closed higher. The next day also the price opening. So what we expected the next day was that we expected that the price can move higher, but we strictly followed this zone of 206. If the price fails to put something above 206, then we expected the market has got a lot of chance to drop. So what happened on Tuesday? The price came down and broke this 206, and you can see the price even broke the 202 support also. Then after the continuous week, you can see on Wednesday the price was taking some support, but again it finds a resistance with the average also. The next day also the price took some support, and the inventory report is also didn't favor the market. So it is a continuous drop. After taking this, what we need to identify here is that initially this 202 was acting as a support. Now you can see after the price broke this zone and everything came down, 202 acted as a clear resistance, and that pushed the price down. And it is clear that we had identified a potential zone last week, and the price came down till 192. So today also we are expecting the market to open more or less near the same zone or below 192. So there are likely chances that the price will be opening below 192. That depends upon the rupee factor also. So what we can go for this week is that we need to wait for the market to again provide us a clear trend deciding zone, then we can enter. So if you are a trend follower, you can make use of the trend. There is no doubt that natural gas is staying in line with the downtrend, and the resistance zone of 196, so we have not marked it, so you can mark 196. So the price will take some resistance around 196, 192, and the expected target can be around 186. Till 186 the price can come down. So if you are a trend follower, just make use of the trend and go with the trend, or else since we have made a sufficient profit in natural gas last week, just we need to wait for a clear trend deciding zone like how we had identified. So what we will be doing for this week is that we will be monitoring the market. Once we get a clear trend deciding zone, so then we will put our then we will concentrate more on natural gas. So if you are a trend follower, you can go with the trend. It is likely and expected to be in selling till 202. You can go for selling. We know it is a very big stop loss, but there is no other option. 196 and 202 are the major intermediate resistance zone. So let us see what's going to happen during the trading session, and once we find a clear opportunity in natural gas, we will come back again. So thanks a lot for watching our videos. Happy trading. Take care. Bye.